Good afternoon. I'm Brent Wilsey. With me is Chase Wilsey. We're from Wilsey Asset Management. And welcome to today's Smart Investing Daily Briefing. Well, today we're talking about Hostess Twinkies are back. Well, actually the story is they never really left. About 3.5 years ago, they went into bankruptcy, and I remember it's so funny. People are like going out and buying tons of Twinkies because they're going to be gone and so forth. We try to explain when the company goes to bankruptcy, it doesn't mean the company goes away. It just means that the shareholders lose all their money. So what happens here is we talk about a popular product with too much debt. We always talk about this, and it does happen. No matter how hot Hostess Twinkies were, they had too much debt. They filed bankruptcy, and all the shareholders lost all their money, but now they're coming back.
Yeah, well, it's pretty interesting to think about, actually. I mean, it can be as small as Twinkies or as big as automotives in the case of General Motors. I completely forgot about Twinkies, to be honest, about them going bankrupt, but let's take a look at what they're worth now. Looking at the enterprise value is $2.3 billion. Now, enterprise value is market capitalization, which is the stock price times current shares outstanding, and then you add in debt and preferred stock and take away cash. So that's what enterprise value is, and a good measure for enterprise value is also known as EBITDA. Now, EBITDA is earnings before interest, taxes, depreciation, and amortization. And you look at this on the enterprise value versus EBITDA, and for Hostess Twinkies, it's 10.4, and comparing them to the owner of Oreos, let's say Mondelez, that's 18.9, so that's looking pretty good in Hostess's favor here.
And Mondelez was just in the news, last week we talked about it, trying to buy Hershey. So a lot of movement in the snack area here right now. So I thought it was pretty interesting to kind of look at Hershey. So we'll see when they come out what type of stock price actually trade at. Maybe it'll be a buy, we'll see. But we thought, staying with that, we'd talk about Brunswick Corporation, current price on 48.62, current high 55.76, and the low 36.05. You can see the last 5 years up and down, and not too bad right now. Now, what does Brunswick have to do with Hostess Twinkies? Well, look at this here. They do marine engines, boats, and fitness. So if you're going to buy the Hostess Twinkies, you want to buy fitness to stay in shape. So you're not going to gain a lot of weight. So you buy a company that does pretty well with that. Looking pretty good here. Sales 6.6% on the positive side. Earnings up 17%, so I'm liking what I'm seeing so far here.
Yeah, the balance sheet looks strong as well. You see current ratio 1.8, and debt to equity is only 34.5%, so we have very manageable debt level. Looking at the company going forward, December 2017 estimated earnings per share on a GAAP basis are $3.98. This gives you a target sell price of $65.67. That's above our 30% margin of safety, so this company seems to be in shape.
And before we do the segment, we talked about if we were going to buy it, you want to know, well, how much comes from marine engine, how much comes from fitness. You want to understand the business, where the business is coming from. So take that as a tip if you're going to buy Brunswick here. So let me ask you, if you're happy with the current return on your investments, maybe you're not happy with the current advisor that you're dealing with, but what we have to help you out is we have a free summary page report that gives you the 5 big mistakes investors make, and that's free. All you have to do is ask for it.
Yeah, to ask for it, you can give us a call here at 858-546-4306, or you can contact us at our website, smartinvesting2000.com.